All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Gar Capital. It is Wednesday, September 20th, 2023. Glad to be with you this morning and every morning at 9 a.m. Eastern Standard Time here on the YouTube channel. If this is your first time here, make sure to like and subscribe to our channel. We'd love to have you on board. Turn on notifications so you don't miss any videos from us. Good morning. Let's go ahead and go around the horn. Happy Fed Day. Today is the Federal Reserve rate decision. The expectation is no hike. That's about a 99% probability, with 1% being a 25 basis point hike. Again, anything could happen, as we know, but that's at least the expectation for today. Dow futures are up 118 points, NASDAQ up 0.38%, the S&P at 4506, up 0.36%. The Russell is bouncing as well, 1854. I was looking to short IWM, but we were patient. We've been patient this whole week. Past couple of days has been chop, which is dip in the morning, bounce midday on no news, and then fade towards the end of the session. That's basically what we've had the last couple of days. 10-year Treasury yields 4.337. That's down this morning. The dollar index is down. We're at 105. That seems to be kind of the support now. Previous resistance has now become support. But again, we do have big catalyst, the Fed decision, and then Powell speaks at 2:30. So you get the rate decision at 2, and then 30 minutes to digest the information, see the flashing lights on your screen or your phone, and then at 2:30, Powell will be speaking. If you do like fireworks, feel free to turn on the S&P 500 futures on the 1-minute chart, and you're going to see all the lines go wild. Let's go to crude, down 1% this morning. I do want to talk about crude as well. We're going to talk about that today. Gasoline futures down 1.5%. There was an interesting note I saw today. It said that wholesale gasoline is at its cheapest price since last October. I believe I read that right. It's unbelievable, yet the prices are high because we know transportation costs, summer demand, and then supply cuts from the Saudis and OPEC. So that's kind of what's changing the dynamic. We talked about that golden cross on crude oil, but again, there's something I want to watch again on crude oil. I'm going to show you guys the chart here in a second. Gold futures, again, I have a flat here, 1953, so completely flat, 0.00. Silver futures, 23.59, up 0.59%. Copper, up 0.60%, $3.77. The euro dollar, 107.03. Dollar yen, 147.80. That's down about 5 pips. Pound dollar down about 15 pips, 123.76. And Bitcoin down about 0.40%, with Ethereum down 1.12%. Did we talk about the VIX? VIX is down 1.49%, 1390, sub 14. All right, a couple of things I want to go over yesterday. As you know, I still have Apple calls. It's been a roller coaster ride, at least in the morning. Ups and downs, up and downs. I have the 180 calls. I'm looking to get out of those. I went ahead and posted a note on the blog for our premium and masterclass members, kind of an update for the morning. We were green this morning. Pre-market, we are still green this morning, so not much to really talk about. Underperforming, obviously the S&P and the NASDAQ, but Apple has been outperforming the past 2 days. DAL, I sent out an unusual options activity I saw. About 10,000 involved. So let's go ahead and take a look at that on the blog this morning. If you're not on the blog, make sure to go to our website, www.gar.capital, and choose free plan, and you'll have access to the blog. Let's go and take a look at this chart here. I put DAL UOA. This was yesterday at 1:42 p.m. The 40 strike calls. Now this setup I love. This is what I said. We got to bounce off the 200 MA with a gap to fill at 40.54. You're getting time because it's for October 6th. You're playing support and volume. DAL is outperforming the S&P, at least today. We're bouncing off that 200, like I said. I just don't want to send this ahead of FOMC, which is the real risk here. But I am personally, I didn't want to signal anything else. I wanted to give everyone the option to get in if they wanted to. And again, it does have time. Bouncing off the 200, there's your gap to fill right there. 40.54. We're trading at 39.82. We're about, about 18 cents away from in the money strike. With 2 weeks of time, I do like that. So we'll see what we get on DAL. Again, all we're targeting is the gap fill, 40.54. That's pretty much it. Once we get there, then we'll go ahead and close, or we can leave a runner and let us do our thing. But that's the target, at least for the time being. Let's answer some questions. Good morning. I want to start trading banks. What will I have to watch that correlates to bank stocks? Well, the old school used to be higher rates, better banks. That's not the case, since mortgage origination, obviously when rates are high, are not going to be as high and profitable for banks as people think. So there was the mortgage applications report sent out this morning. See if I can get that for you. Mortgage rate on a 30-year, 7.31% versus 7.27%. Mortgage applications were up 5.4% on a week-over-week basis. The last week before that was down 0.08%. So maybe some refinancing, cash out refinancing, I'm not sure. But again, if you're looking at banks, it really depends on what you're trying to accomplish. If you're just looking for long-term holds on banks, I like JPM, I like Goldman Sachs. Those are the two I like. Goldman Sachs has underperformed Morgan Stanley. But the point I'm trying to make is that you have different types of banks. You have investment banks, you have commercial banks, you have brick and mortar, the Citibanks, the JP Morgans, and then you have the small banks, the regionals. So it just depends on what you're looking for. In general, they do move differently. There's correlation with yields, there's correlation with the dollar. Right now with banks paying more for deposits, getting less credit application, at least the mortgages this week says otherwise. Banks are not that attractive, but they are cheap. So again, it's kind of in my opinion, kind of like the discount store of these sectors. I do like banks long term. The problem is that they're kind of treated as utilities in terms of regulation. So you kind of have to have the expectation that you're not going to have tremendous growth in a bank. You're looking for something rock solid that has tons of cash on their balance sheet, good books, good management, and really focused on loan growth over time, but not too risky stuff where you're just kind of pumping and inflating the numbers a la 2008, as we know, in 2007. So banks, I mean, you're going to get a dividend return. Great. We know Warren Buffett loves his banks. That's fine too. And again, if you're looking long term, really can't go wrong with the major banks that are too big to fail, as we know. JP Morgan, too big to fail. Wells Fargo, too big to fail. Bank of America, Citi. I mean, if they didn't go under in 2008 in pretty much a financial catastrophe, I think they'll be fine long term in 2023. Good morning, Mystical Arab. Benjamin says, good morning, Carlos. Let's go ahead and take a look really quickly on IWM. Here's one that I want to take a look at. So let's go to the daily. That makes a little more sense. Got a gap to fill here at 176.26. I haven't learned below 181. And this one's tough. I've traded a couple times, but it does make you pull your hair out sometimes because the premiums run slow and there's not a lot of volume. But we did break this trend line here from October. I mean, if we just want to mess with it, let's go to activate drawing. Again, if you just want to go by the wick low, we still punctured that downward trend. And we settled below that. And you're below the 200. So small cap, these small cap names are looking weak. There's a lot of banks, a lot of energy in that. So keep an eye if we get a little more weakness. Remember the seasonality, end of September, very weak. We're pretty much walking into the seasonally worst week for the S&P all year. The good news is that towards you get into October, it gets a little better. But again, pre-election, we know that there is a slam expected or a pullback expected in October. So a lot of it is just really chop at the end of the day. Good news, we have a catalyst today. Good news, we'll see what Powell has to say in terms of the dot plot and what the Fed expects. So it's a really a waiting game, guys. Let's go to crude oil. And now this is something that obviously I stare at pretty much every day. Just for the fact that I missed that reversal, we got the breakout, yada yada. Let's go to add study. We're going to go to momentum studies. We're going to go to RSI. And again, oversold. We got as high as 80. Did we hit some resistance here at 93.68? You tell me. Let's do it right here. We'll put it at 0. We'll extend to the right. Yep. Let's edit properties. You may have hit peak oil short term, but the last time I said that was here, and we were overbought, and we soared. So, I mean, we were right here too, overbought. This is where I shorted, and we continue to go higher. But is crude a little long in the tooth? Possibly. So I'm looking for 89 to break. If it does, I'm looking to retest this previous resistance all the way down to 85.81. So futures members need to be extremely patient with me on that one. I'm going to widen the stop, but I want to swing it. I'll buy just one micro. That's fine. But I know that crude is going to correct. It's very crowded. It's a crowded trade now. Everyone likes high energy prices. That's usually when people start selling. So take a look at that. Pretty clean on the daily on crude oil. Take a look at that. I mean, resistance back in October, resistance back in November, and we pulled back, just chop, 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 got up there. I personally don't believe in triple tops, but again, a nice retest here to the 20-day moving average, right with that previous resistance, showing that support. Why not? I think we retest that, kind of wring out all the excess in terms of the longs, overbought, as you can see. Well, we were. Let's see what we get. Let's get below 89 first, but I definitely want to short crude oil. Do you see yourself not making any moves until Powell speaks, or playing it by ear? In regards to today's action, what I'm going to do is I'm looking to get out of my trades. If I have Apple hits 40% in the money, I'm taking it. I'll leave a runner. No problem, because it expires this week. So again, we want to be safe. I'm going to give everyone, obviously, the option to do what they like. The goal is to get it this morning with this tape being higher. See if Apple pushes up a little bit. And if it does, we'll go ahead and take it. Be 1-for-1 sitting. And if we get DAL this morning on that UOA, even better. DAL I definitely want to hold because I have time on that. I don't think we'll even have a choice otherwise because I think we get both. I think we get both ahead of Powell, and then we have feet up, and then we'll see the reaction. Again, we know the expectation, no hike, but the reaction, that's what we're looking for. And right now, we're in the exact same place we were pretty much right around Monday open. That's not going to get us anywhere. We just have to wait for now. And again, I've looked at Microsoft for shorting, that reversed. I looked at Netflix for shorting, that reversed. IWN for shorting, that bounced. Tough, tough, tough out there. Again, very choppy. NEO, yeah, NEO fell on the convertible notes offering, which is basically debt. So you got that pullback, obviously, on that news. We'll go to the daily to take a look. You're slicing below the moving averages now. You got another gap to fill here at 789. Let's go ahead and create an alert to the downside. And again, guys, I've had alerts break down like crazy on the downside for like Microsoft and Netflix, like I just said, and they just keep getting choppy. So let's be very fluid with our alerts. Let's let our alerts not be fill orders, but just be a notification to take a look at the stock. Let's not be beholden to just levels, at least here, because it's so choppy. Would DAL be good to get into after the Fed? I think we're going to get it this morning, Joey, on that UOA. We're about 10 cents away from the money. I think we ended the day green on it, but if we're flat on it, go for it. Absolutely. If that's what you want to do, we got time on it, so we'll rock and roll. Hey, Carlos, I want to thank you for those DAL calls. Hey, you're welcome. Also, what was your entry price on DAL? Let's see. Thought I wrote it down, but again, it was a UOA. All right, let me get this loaded here. Yeah, I'm up 12% on DAL. My apologies. And I got in at 75 cents. 75? Was it? I got in at 70. No, what is it the price I got in? 67. Here you go, guys, so you guys can see. Again, Robinhood for everybody. Everyone likes Robinhood. I'm not a fan. I like TOS, but Robinhood, everyone likes because everyone's kind of into it. Everyone kind of uses it. 7 contracts on those UOAs. I got 67 cents as my fill. Don't worry about the break even. I don't worry about that. But right now, again, a $500 risk, up 12%. Nothing to make victory laps around. But hey, if it helps you guys, I'm with it. Absolutely. Any levels for euro dollar? Yes, I do have. I do have Kevin on it. Kevin is on that trade. He is short, I believe. Let's see. Forex. $6.95. He was trying to scalp it. Okay. So he didn't catch that one. But taking a look at euro dollar, I mean, the downside is still there on the hourly. Again, if you're scalping, this is a scalper's paradise. But if you're looking for, a swing, we did swing this trade to the downside when we got that breakdown. It just didn't give us enough here, but we're hitting some support. Again, ahead of the FOMC, it's so tough too. Again, if you're scalping, that's completely different. You're using pure technicals. But if you're looking at, kind of a swing trade here, if you're looking for more upside, 107.73 is the level. If we're looking for more downside, you have to break the lows of 106.30. If not, I'm afraid they'll just chop you. And that's what it looks like it's doing today. So, I was looking at dollar, Canadian dollar, because the Canadian dollar is a proxy for oil. So again, if oil slides a little more, the Canadian dollar will be weaker, meaning we'll get a bounce on the dollar, Canadian dollar. Look at just the past couple of days. Again, that means the Canadian dollar is getting stronger. We know the dollar has stayed strong, but this is strength versus strength. And the Canadian dollar, again, is pegged to the crude oil market, as we know. What sucks is that I had XLE last week, if you guys remember. And crude soaring and everything like that, right? Never got there. Never got there. That's actually breaking down on the hourly. If we look at the daily on crude, on XLE, we got a gap to fill here at 89.36. Maybe we can use that as a proxy. But again, with regards to XLE, it has underperformed crude oil. Crude oil has been up 14% in the past rolling month, while XLE has only been up about 4%. What can you do? I mean, companies in XLE literally are beholden to crude oil prices, but that's the market for you. It's not rational. If it was rational, man, everyone with PhDs and degrees with from different universities would be amazing at it, and they'd be billionaires, but they're not. It's a little more than just knowledge. It's behavior, it's skill, it's also discipline. It's not as simple in regards to the market. You have to adjust there. What treasury? What treasury? Treasury market? I don't know in that regard what treasury. But either way, we do have the Fed Reserve rate decision again today at 2 o'clock. I will let you guys know what's going on in the blog. We'll tweet the information out. Powell will also speak at 2:30. I'll be watching that closely. Anything that changes, of course, any updates will be on the blog as always. And we'll keep you guys informed every step of the way. Glad to have you on board again. Have a great rest of your morning, and I will see you guys tomorrow. Cheers.